Assalamualaikum and salam sejahtera to our panel, Encik Husnizam Hossin and Cik Maizura Muhammad Isa. Today, my group and I will be presenting on our analysis for the Pharma Niaga Berhad. My name is Muhammad Ikram.
My name is Nur Fatia binti Abdul Razid.
My name is Siti Mara binti Azman.
My name is Aina Balkis binti Jaafar.
And my name is Nur Ain Afika binti Ramli.
My name is Ahmad Tumizi bin Muhammad Nafis.
Alright, I will share about introduction of financial analysis. Financial analysis is a procedure of evaluating businesses, project, budget, and other finances related entities to determine their suitability for investment. And in addition, one key area of financial analysis is involve extrapolating the company's future performance. Moving for the second slide.
Now, let me explain about the analysis of balance sheet for Pharma Niaga Berhad in 2017 until 2019. Based on the table, we can see that Pharma Niaga Berhad was holding more in current asset and fixed asset in 2018 compared to the 2019. This is because in 2018, Pharma Niaga Berhad was focused more on the CSR. In 2018, Pharma Niaga Berhad was holding more in fixed asset compared to the current asset. The reason why Pharma Niaga hold more in fixed asset is because in 2019, Pharma Niaga Berhad was focused on new project, which is to produce a new product of medicines. In 2017, Pharma Niaga Berhad still holding more on fixed asset compared to the current asset. The reason why Pharma Niaga holding more in fixed asset compared to the current asset is because Pharma Niaga decide to invest by RM 100 million on halal and affordable vaccines. We move on to the next slide. Now, the next slide is the financial structure for Pharma Niaga Berhad in 2017 until 2019. In 2019, Pharma Niaga was focused on the pharmaceutical and medical product remain at good level. And in 2018, Pharma Niaga Berhad was spent much on the long-term liability, which is 1398.38 million. And the last one in 2017, Pharma Niaga Berhad focused on the equity shares. We move on to the next slide.
This slide focus more to Pharma Niaga interest obligation. As we can see, there are two sections, which is interest paid and interest received. If you look at the interest paid, the interest paid have increased from year 2017 to 2019, and that goes same for interest received as well, where it increased from year 2017 to 2019. Move on to the next slide. This slide will explain about the Pharma Niaga dividend distribution. From the year 2017 to 2018, Pharma Niaga dividend paid has increased. However, in 2019, it has become negative. And in terms of dividend received, Pharma Niaga dividend received have dropped rapidly, which is to the point 2019 it become negative to 57.2 cents. Move on to the next slide.
Okay, for now is ratio analysis of Pharma Niaga Berhad from 2017 until 2019. For the first one is liquidity ratio. And the first one is current ratio. The best one is during 2019, which is 0.78 times. And for the second one is quick ratio. And the best one is during 2017 with the amount of 0.26 times. Next one is leverage ratio. Leverage ratio can be divided by two, which is debt ratio and debt to equity ratio. Okay, for the best part one is 2017 with the amount of 65.97%, and for the debt to equity ratio is on 2017, which is 0.85 times. The next one is activity ratio, which is inventory turnover. Okay, for this one, the best tag is on 2019, which is 4.41 times. And the last one is profitability ratio, that can be divided by 4, which is gross profit margin, net profit margin, and return on total asset. And last one is return on common equity. Okay, the best one is for gross profit margin is on 2017, and for the which is 14.42%. For net profit margin is for 2017 as well, with the amount of 2.37%, and for return on total asset also for 3.43%, which is in 2017, and the last one also in 2017, which is 10.42%. The next slide is
All right, so moving on to horizontal analysis. So we can see from the chart above, the liquidity ratio. All right, so for the current ratio in 2019, it is better than 2018 and 2017. This means that during 2019, the firm were able to pay short obligation term. So for the quick ratio, in 2019 and 2018 is the worst compared to 2017. This means that the firm was unable to pay short obligation with relying on the sales or on inventories and prepaid. Now moving on to the next slide. All right, for the leverage ratio, the debt ratio is in 2019 is bad compared to 2018 and 2017. The firm is unable to pay the debt and not depend on the debt to cover the company. So the debt to equity ratio in 2019 is worse compared to 2018 and 2017. This means that the firm unable to pay the debtors and over relying on the equity to finance the firm. Next one is we move to the next slide, which is activity ratio. All right, for the activity ratio, we have one item which is inventory turnover. Inventory turnover in 2019 is better than 2018 and 2017. This means that the firm is selling quickly its product and there is considerable demand for their product. Now moving on to the next slide. So we're going to see the profitability ratio. All right. So the gross profit margin in 2019 is worse compared to 2017 and 2018. This means that the firm is not generating strong sales prices relative to the cost of goods sold. While the net profit margin in 2019 is good compared to 2018 and 2017. This means that the firm is pricing its product correctly and is exercising good cost control. The return on asset in 2019 is better than compared to 2018 and 2017. This means that the firm is able to generate net earning very well. So the last but not least is return on equity in 2019 is better compared to 2018 and 2017. This means that the firm managed to generate the equity provided by the shareholders. Now moving on to the next slide.
Okay, so vertical analysis for liquidity ratio for 2019, we compare with a competitor company which is Apex Healthcare Berhad. So for liquidity ratio, Pharma Niaga got the lowest ratio for all liquidity ratio, but Pharma Niaga increased year by year. The main reason why the Pharma Niaga got the lowest liquidity is because their company was not successful and not big compared to Apex Berhad. So for next slide. So leverage ratio, leverage ratio for debt equity ratio. Debt equity is Pharma Niaga got higher rate, which is 1.61. It because the Pharma Niaga was used less shareholder equity compared to Apex. And for debt ratio, the company was obtained a short-term loan. So because they focus on continued drive to provide quality product and services as well. So for next slide is activity ratio. For activity ratio, Apex Berhad was the highest one, which is 6.17%, and the Pharma Niaga is 4.41 times. It does not mean that Pharma Niaga have a worse management. Pharma Niaga has shown increase by year by year. The inventory of Pharma Niaga was increased by 1.43% compared to 2018. So next slide is uh, for profitability ratio. The gross profit for Pharma Niaga was the lowest one. The lowest amount of gross profit in the year, and the gross profit was record RM 93.8981 million. So for net profit Pharma Niaga was set negative 5.3%. It because the low earning before interest rate, interest tax, and the high cost of expenses. And for return of asset, ROA for Pharma Niaga Berhad was negative 9.39%. The negative ROA for Pharma Niaga was because the earning after tax, and Pharma Niaga was focused on new project, which is to produce new product of medicine. And for return of equity, Apex Berhad at 12.40%, and for Pharma Niaga is negative 1.87%. It because the negative profit after tax compared to other year, but the total liability and shareholder equity is higher because Pharma Niaga Berhad shall recover 7.52% after the drug acquisition. Okay, so next slide.
Okay, for now is introduction of risk and statistical analysis. The return on investment is the annual return of the asset for a period of many years. Research consultant and institutional investors, along with the business and economic statistic, use past returns to forecast potential return expectation. This appraisal process let you select the best combination of securities to optimize return during your investing on time horizon. Next slide is
Alright, I will share about risk analysis. So the first is expected return. Based on expected return, Apex is the highest compared to KLCI and Pharma Niaga. It also shows that Apex have the highest riskier compared to others. And for the variance and standard deviation, we have Pharma Niaga as the highest compared to Apex and KLCI. And it also shows that Pharma Niaga Berhad Pharma Niaga Berhad is the riskier compared to KLCI and Apex. And lastly, we have coefficient variance, which is KLCI has the lowest covariance with negative 3.63% compared to others. And we move to the second slide.
Okay, in this slide, we're going to talk about regression analysis between Pharma Niaga Berhad and Apex Healthcare Berhad. Okay, if we look at the table, both R square and beta, Pharma Niaga have the highest value compared to Apex Healthcare. However, the alpha value and ANOVA value, Apex Healthcare Berhad have higher value compared to Pharma Niaga Berhad. On the next slide. Okay, in this slide, we're going to explain about simple regression of Pharma Niaga Berhad and Apex Healthcare Berhad. And after looking at the table and the number, we can see that Pharma Niaga Berhad have both R and R square value higher than Apex Healthcare Berhad value. Move on to the next slide.
So for company intrinsic value, the graph above it shows that RFR is 3.32% and the market rate is 7.01%. For Pharma Niaga and Apex Berhad, we can see that it was overvalued, which is Pharma Niaga is lower than expected return with negative 2.3%, and we suggest to the investor to sell the stock. And for Apex Berhad, the average value is lower than expected return, so the investor need to sell their stock also. So for next slide.
Alright, for the intrinsic value, based on the figure that you can see on this slide, it shows that we can conclude that Pharma Niaga Berhad is overvalued stock, which is we can suggest the investor to sell the stock with the price of RM 1 ringgit 29 cent with the compared with the market price that only RM 2.06%, 0.6 ringgit. And next we move to the second slide.
All right. So for conclusion and recommendation, we are suggesting to the current investor to sell their stock before gaining more losses because of the low performance of Pharma Niaga Berhad and the overvalued stock that show in risk and return analysis and the intrinsic value.
Alright, moving on to introduction of technical analysis. Technical analysis defined as the use of a specific data, including the market index, value, and technical indicator for the analysis both aggregate stock price and individual stock price. It also involves the examination of the price market data, such as price and the volume trending, which lead to an estimate of future price trend, and therefore, on investment decision, it guideline whether to buy, sell, and hold the stock. Moving to the next slide. It's about introduction of KLCI. In Malaysia, the Kuala Lumpur Composite Index, KLCI, is now known as the FTSE Bursa Malaysia KLCI and adopt the FTSE Global Index standard starting from 6 July 2009. The Bursa Malaysia Index series comprises of industrial index and sectoral index such as construction, consumer product, finance, technology, plantation, and etc. Moving to the next slide.
Okay, so for trend analysis, a trend is simply the direction of the market, which way is it move. Market move are characterized by a series of zigzag, which is resemble a series of wave and very obvious peak and trough. For uptrend is defined as a series of ascending peak and trough, and for downtrend also a series of descending peak and trough, and for sideways is horizontal peak and trough. So next slide. So for support and resistance, based on the graph, Pharma Niaga Berhad, they have two support and resistance level from year 2018 until 2020. In April 2018, the support line showed that the investor should sell the stock because the supply may overcome and demand and prevent the stock price from rising above the resistance line. For 2020, the investor should buy the stock because at this time the demand will access the supply and prevent the price from falling down below, and the trade will maximize their profits. So next slide. So for line chart, a line chart is the simple form of the chart available to the technical analysis with time presented on axis and price on y-axis. The actual time function will depend on the position in the market, and a market maker will be interested in price fluctuation on the market on a minute by minute basis. So next slide.
Okay, in this slide, we're going to talk about market timing indicator year 2018 to 2020. The first indicator that will be used is simple moving average using short-term 21 days. Using this indicator, we can detect that there are two buy signal, which is the green arrow that happened on April 2019 and April 2020. However, the sell signal occur at June 2018 and June 2019. Move on to the next slide.
All right. For the intermediate 60 days, there are two selling signal and two buying signal. We have detected that the buying signal is in May 2019 and May 2020. For the selling signal is in June 2018 and at February 2020. Next slide, please. So for the MACD, we have detected two buying signal and two selling signal. For the buying signal, there is in May 2019 and in May 2020. The selling signal is in June 2018 and February 2020. So next slide, please.
This slide will be using RSI indicator by using 21 days short term. Using this indicator, we can detect that buying signal happened at July 2018 and April 2019 when the price move above 30. And however, the sell signal occur at November 2019 and June 2020, where the price go below than line 70. Move on to the next slide.
All right. So for the intermediate 60 days RSI, there are two buying signal, which is in July 2018 and April 2019. However, the selling signal is in June 2020 and July 2020. So moving on to the next slide.
Okay, this indicator will be used short term 21 days by using indicator William R. And using this indicator, the buy signal occur at July 2018 and March 2020, which is the green arrow. And the red arrow indicates sell signal, which happened at January 2019 and July 2019 as well. Move on to the next slide.
All right. For the William R intermediate 60 days, the green arrow indicate the buying signal and the red arrow indicate the selling signal. So we identify that the buying signal is in April 2019 and also March 2020. The selling signal is in November 2018 and also July 2019. So moving on to the next slide, please.
Okay, the last indicator that will be used is stochastic oscillator by using short-term 21 days. Using this indicator, the buying signal that we can detect happened at August 2018 and March 2019, and the sell signal happened at June 2019 and April 2019. 2020, I'm sorry. Move on to the next slide.
All right. The stochastic oscillator intermediate 60 days. So we have detect two buying signal and also two selling signal. The buying signal is in September 2018 and also November 2019. The selling signal is in June 2019 and also May 2020. Now moving on to the next slide, please.
So now let me explain to you about the analysis indicator for the short-term analysis. Based on the table, we can see that the indicator that show a selling signal for the future investor is the relative state index, William %K, stochastic oscillator. And for the indicator that showing a buying signal for the future investor is the single moving average, moving average convergence divergence, and the last one is the William %K. So we move on to the next slide. The next slide is the intermediate term analysis for Parmanaga Berhad. Based on the table, see that the indicator that show a selling signal for the future investor is the relative straight index and the stochastic oscillator. And for the indicator that showing a buying signal for the future investor is the single moving average and William %K. So we move on to the next slide.
Okay, for the conclusion is, from the data collected, investor can decide whether to buy or sell the stock by the recommendation that we give in the above analysis. For current analysis, we suggest investor to sell their stock because of the declining of the price. For the future investor, we suggest to buy the stock because the price is expected to increase in the future.
All right. I think that's all from us. Thank you all. Thank you.
Thank you.